Hey, good morning, everybody. So happy Monday, first day of daylight savings time for the U.S. stock market. And before you start complaining about having to get up an hour earlier, remember the stock market now opens at 3:30 a.m. here in Honolulu. Anyways, we're bright-eyed and bushy-tailed and ready to rock and roll. Hey, you can see this market. It kind of opened up kind of funky, right? And that whole trade we've been telling you about, it just keeps showing its face. And this morning's no different. It's a great example. You look at the Nasdaq's down about 4 or 5 points right now, just a little bit. The S&P is kind of bouncing red, green, red, green, red, green, right? Up a point, down a point, up a point, down a point. But that Dow at another all-time high. And that's that money shift that we were talking about. You can listen to all this crazy talk you want on CNBC and stuff about all this deep analysis. But the fact of the matter is, institutional money is moving into safe haven stocks, your value stocks, good balance sheets, good forward looks and stuff like that. What's holding this market back? Why your S&P can't get that high, and what's holding the Nasdaq back is your normal tech leaders are not leading. You can see Apple's up maybe about 70 cents. It's been red, it's been green this morning too. But until Apple, really, you can watch Apple right now and it'll tell you the fate of the S&P 500. The S&P 500, unlike the Dow, has some very heavy stocks in it, tech stocks like Tesla, right? Tesla. I haven't looked at Tesla yet this morning, but we'll see how that's going. You see, the Nasdaq, just in my talking, is gone a little green here. It's up about 2 points. That Dow is just going crazy. So, and that kind of plays into tomorrow. We're going to give you another stock of the week as always, and we've got a real neat one tomorrow. So tune in for it. It fits into our criteria of the strong balance sheet and product or services and a good dividend and stuff. But it's kind of a really unique formula there for the business model and what they actually put in the market. So tune in for that tomorrow. But the reason I'm talking about the stock of the week is a few months ago, we gave you a stock of the week, Hawaiian Air. That's a double already. You want to know how to play the recovery. You look to the industries that are going to benefit from it, right? We gave you ET. It's early Monday, guys. We gave you ET last week or the week. Yeah, last week. No, the week before. They're all just letters and numbers. That's a nice energy play, right? Energy is going to be the benefactor of this reopening and stuff like that. But the Hawaiian Air play, that's how you play this reopening. Position yourself and let it happen. Let it happen. Let it happen. Don't be impatient with it. Don't be petulant with it. Now we're looking at our Hawaiian Air. Boom, it's a double. And it gets a nice dividend and stuff like that. And it's got a lot more prospects too. Another airlines, if you guys are looking at it, we like is Love. Now, the reason we like Hawaiian Air and Love, guys, is we live in Hawaii. So we get a little bit of a up close view of the tourism industry, because really how Hawaii's tourism industry goes really is a direct reflection and an early indicator of the rest of the world. We were talking to a couple members that have done some traveling recently, one to Los Angeles, and he was talking about how the domestic flights are packed. The international flights are empty. That helps Hawaii, right? What are the two embedded airlines in the Hawaii tourism? It's Love, which is Southwest, right? They now have a nice little pocket of planes down here. They're doing all kinds of flights. And Hawaiian Air, of course, right? And so as this opens up now on a place like Hawaii, you think about it like this. This is showing you what's happening with this reopening globally, right? And just from what you've heard from this member when he was in Los Angeles changing planes about which planes are full, which ones are open, just by living in Hawaii and knowing just a couple of days ago, our mayor opened up bars and stuff like that. We're starting a reopening. But you see, like, your big hotels, your Hilton Hawaiian Village, which is such a big hotel, guys. Every morning, the news tells you the occupancy level of hotel rooms in Hawaii locally, the local news. Did you know, for you Hawaii residents and anybody that watches that that number does not have the Hilton Hawaiian Villages numbers in it because it skews it. It's so big. It's like a city within a city if you've ever been there. But they just had their first luau in a year. Wow. So this is a good sign, right? And so how do they feed that luau? Well, tourists, how do they get there onto the island? We're in the middle of a freaking ocean. Well, they got to fly, right? And once they get over here, they want to go to Maui. They want to go to a big island for the volcano and stuff. And so it makes sense. And you see how you logically put your trades together, guys. Be smart about it. Don't be impatient. Don't be petulant. So look, guys, we still think Hawaiian Air and Love are good stocks to have in your portfolio right now if you want to take advantage of it. I get asked a lot about the theaters, like AMC's having a good morning this morning. It's up about 8%. They're going to open some LA theaters and stuff. So, the money's going to start hitting the registers again. I'm not sold on theater reopens. I think at first they'll get a push, but then I think we learned a lot over the COVID, guys. And that's what I really want to talk to you about. What did we learn about our economy and the direction it's going in, which ultimately will dictate the stock market, right? And your investments. Oh, we've seen, right? People attached to online commerce very well, right? People adjusted to mobile working very well. We've seen all of these things. The problem, I think, with theaters is at first people are pent up. They want to get out. But I think it's more important, the bars and stuff like that, alcohol, right? And everybody wants to go down to Buffalo Wild Wings on a Sunday and watch a damn game and get drunk and have some wings and stuff, right? It's been a year or so. So I think that'll really do well. I think retail and hospitality will really get a furious pick up on that. But I think those theaters will be an initial spurt and then they'll just kind of fade down. And the reason is, I think streaming has dictated that, think about it, guys. And this is getting a little deep, but really just take a few minutes to think about this. You see the NASDAQ just went green and the S&P's red while I'm talking. That's what I'm talking about. Apple. Apple's up about $1.60 now. Let's see if it comes out to play. But what I was talking about was the reopening of theaters and stuff. I think streaming has really taken a foothold. And I think with electronics, you combine it with the fact that electronics, you can basically put a theater in your living room right now for less than $2,000, right? $1,400 stimulus check. Anyways, but you get what I'm saying here. It's too easy to bring the theater to your home. It's too easy to bring the theater to wherever you are. There'll always be that effect of going to the movies and having the surround sound and stuff like that. But think about how the intimacy and stuff on a relationship level, having a date over to watch in your home surround system and stuff like that, rather than having to go find parking, pay $50 for popcorn, all this stuff, right? You can have the ice box in the kitchen right there. I think this is going to play on theaters. I think they'll get an initial bump like AMC did this morning. But I think all told, be careful with that trade. I like the airlines better. I like gas better. I like energy better. Let's take a look at the Apple chart since we're talking here, guys. I know this is a little longer of a morning thing, but let's have some fun here. Look what happened to Apple while we were talking. Let me move that handsome guy out of the way. Look at that green bar. Now, this is what the market needs. It needs Apple to come out and participate. We told you last week we picked up some Apple options, which we're very happy with right now. We also are playing Ollie bargain basements for you guys that are following along what we're doing. Ollie has OLLI. That's a discount like your Ross stores and Dollar General. Dollar General had a good morning this morning. It had some big news. But look at that Apple go. That's what I'm talking about, guys. If this picks up, things should go well. Now, let me kind of talk to you guys. Let me take you off screen sharing here. we'll talk for a second. So let me close with this. Now, going into this morning, you think about it, guys, and really, you always want to read the market forward. So here's some tips on it. Think about it. We have the stimulus deal is in the bag now. The checks are already hitting accounts, right? I think somebody said 600 million's already hit accounts already. Chime and stuff are releasing the money. They're actually making fun of the big banks because Chime actually is giving access to the money to their customers. Most banks are holding it till Wednesday. That's what the federal government gave them permission for. But you think about it, this stimulus is done. Moving forward, what is the next bill? Well, they're talking about infrastructure. They're talking about other things. They're talking about pro-economic growth, which is very, very critical right now. Strike while the iron's hot. Everybody got what they wanted out of the stimulus, right? The people got their money. The people got their money. The states got their help with their budgets. Just in Hawaii, 3 months ago, 4 months ago, our governor was talking about furloughs for our state workers. Just this weekend, he came out and said no furloughs because of this money we've received from the federal government. We were upside down on our rail development. We got $87 million from the federal government to help that. That's happening in a lot of states right now. So everybody got what they wanted. Everybody's in a good position going forward, right? So now it's all about the economy, guys. It's all about economic growth. It's all about how we address inflation going forward. Let's enjoy this good feeling for a couple of days, right? It's been a long year, right? Since the COVID started, but let it kind of work out. Be patient with this. Let it work out a little bit. But that's what's happening going forward. Now, Jerome Powell and, of course, the Fed are meeting at Jackson Hole over the next 2 days. Wednesday afternoon, we'll get the report at 2 o'clock. So really, there's not much happening on the economic report front until Wednesday afternoon. Then, of course, Thursday morning, we'll get the unemployment numbers. The big concern right now for the Fed is inflation. You see those rates. We've talked about that 10-year rate and how it shocked the market a couple weeks ago, right? It wasn't the move to 1.6 that shocked the market. It was the velocity of it. It was the speed of it. Now you're getting these logical moves, right? It went to 1.6, right? Remember, kind of went back to that high 1.4s, trickled around that 1.5, held the 1.555. Now it's holding the 1.6. Very logical, orderly move, very controllable. The problem is the Fed's target is 2%, 2.25%. What's going to happen when it gets to that percentage? Because the Fed is really kind of up against the wall, and we just added another 1.29 trillion to the debt. So we'll see how that works out, though, guys. We'll keep our confidence in Jerome Powell and see how he does. Other than that, guys, it should be a good week for retail. We'll see. Like I said, we're playing a little bit of Ollie. Don't forget, Nike has earnings too on Wednesday, which should be a lot of fun, right? Now, here's the thing. Don't run out and buy a retail stock right now because of the stimulus. Remember, don't like with Nike. It's easy to think, oh man, the stimulus, everybody's got 1,400. Last time they had 600, they spent it on Nikes. Imagine what they'll do at 1,400. I'm gonna buy me some Nikes for the earning. Be careful, because remember, this $1,400 will not be in this earnings report. It'll be in the guidance for going forward. It's more important right now with retail how they guide going forward as much as it is what they put in the bank on the last quarter. You want to see a nice strong quarter from any stock you own, but you want to see some good forward guidance at this point. And we'll see how that shakes out. Apple's up about 2%, guys. The market's just kind of gyrating here. We're up about 44 on the Dow, about 30 on the comp. S&P is still flat. It's up 1 point. It's down 1 point. So, guys, let's see how this this Monday and Tuesday kind of shake out. We'll be back tomorrow morning with our morning update, and we'll have our stock of the week tomorrow afternoon. Okay, guys. And yeah, I think you'll really enjoy this one. But look back at those stock of the weeks we've given you already. The ET, the Apple. Look at Apple. You could have bought it at what, 117 last week when it was released. It's up about 124 right now. ET is doing real well, right? We talked about a CCI Crown, and we talked about Hawaiian Air, right? Which is one of our favorites going forward. Anyways, guys, you have a good Monday, okay? Let's adjust to daylight savings time. Other than that, we'll see you guys tomorrow morning. Let's see how this market shakes out. Remember, really the key to this market is we need the Apples, the Microsofts, and those to come out, the general tech leaders to come out and start taking the lead again and push this S&P 500 up. And we'll see how that works out. All right. All right, guys, trade safe, trade intelligently. I'll see you guys in the morning.